It's International Women's Day. Here's an idea. Let's get women to ring the opening and closing bells at exchanges around the world. Why not? And whose idea is that? Debbie Fuhr. She's founder of ETFGI. She's with me. And also Kathleen Smith, founder of Renaissance Capital, is here. I turn to you, Debbie, because this is an idea that you had, and we had women ringing the opening bell today. And it's, quite frankly, a great idea.
Yeah, so a year ago, women in ETFs rang the bells at 9 exchanges. The UN had an initiative to ring the bells at others. We partnered this year, and we are ringing the bells at over 30 exchanges around the world. And the exciting thing is, over the past few days, many exchanges have said they want to be part of it next year. So we've been ringing the bells everywhere from Canada down to South Africa. So it's been an exciting couple days, and it ends on March 11th. But today is International Women's Day.
And Kathy, of course, this idea of diversity in the financial services industry, women are still not as represented as men. This has been an ongoing problem, so maybe this is a step in the right direction.
Yes, women are woefully underrepresented in finance. And since women live longer, we are going to need financial products that are creative to help sustain us in retirement. So we need more women creating these financial products, and we need to support that.
You have both founded organizations, and you're very research driven. And Kathy, I want to look at you first because you're really known as one of the IPO experts, and your research is used by so many people. Well, we haven't had a lot to talk about, right? The IPO market really dried up here in the first quarter. A lot of volatility. I know you and I talked late last year, and we had hoped that maybe there'd be some recovery. Are we going to see a rebound in the second quarter, do you think?
We will see a rebound, and it will be a function of the stability in the overall stock market and the returns on the already public IPOs, which we are seeing based upon the Renaissance IPO indices. Our ETFs track those indices, and they are starting to flash green. Over the last month, we've seen twice the return of our indices compared with the overall market. That says, okay, the coast may be clear. It could be a better time for issuers to come to market, and we are only going to see some of the strongest, most profitable companies come to market at this point, and most attractively valued for good returns for investors.
And who has already filed? Who's kind of waiting in the wings?
We have a long list. There are hundreds of companies waiting to go. The ones I might highlight that I think could work in this kind of environment are profitable, fast-growing, including in the consumer side, SoulCycle. In the also consumer, Frontier Airlines is one. We see some good healthcare companies that are lined up. Also exchanges in financial technology, bets. That looks like it's $1 billion plus in revenue, fast-growing, and profitable. That'll be the profile.
Debbie, let me turn to you in terms of ETFs. We see so many ETFs created. You can find an ETF in almost any industry and subsector. What are some of the trends you're seeing for this year?
Yeah, so I would say some of the trends are probably linked to what Kathy just said, that you look at, in the US, 10,000 people are turning 65 every year. They're looking at where should they be investing for their retirement. And so they're using robos, which is an automated process where you go to a website, you plug in your risk tolerance, how much money you have to save, et cetera, and they build a portfolio typically of ETFs. And so I think retirement, robos, smart beta, which basically means products that are using indices that are based on factors like dividends or size that over long periods show risk premium. In essence, it means they should deliver better returns than a market cap index over long time periods. We're seeing search for yield. People are feeling more confident going back into high yield. We're seeing money going back into emerging markets recently. We're seeing small cap versus large and broad. So I think, and a little bit going into gold. So, but people are feeling more positive on the market overall, so a risk-on trade is where we see people putting money right now.
And in terms of the type of sectors that have outperformed, generally speaking, are we seeing ETFs in a particular sector outperform various individual stocks? I mean, this is part of the reason you move into an ETF to try to cushion yourself from that volatility.
I think typically what you see is it's hard to find funds that do better than the benchmark. So we look at the performance of active funds where you pay higher fees, and what you found in 2014 is 86% of active funds, mutual funds, did not do better than the S&P 500. So what you find is by going into an index-based ETF, you're typically paying less than 1%. On average, it's 31 basis points, S&P for 9. So the benefit is if you pay less, you get better performance. And so we're seeing people look at indices that are broad, but we're also seeing them focus on different sectors. And so you find ETFs are quite unique in that pension funds and hedge funds, financial advisors, and then retail can use them. So they're very democratic and a useful tool for people, whether you're investing for retirement or investing to buy a house.
Debbie Fuhr and Kathy Smith, so great to see you both here. Thanks so much.
Thank you.
Thank you.
I'm Rhonda Schaffler for The Street.